Well, PCE, personal consumption expenditures, that's the Fed's preferred gauge of inflation, in line with expectations today, rising 0.2% from the previous month and 2.3% year over year in October, while core PCE, which excludes food and energy, increased 0.3% on a monthly basis and 2.8% annually. My next guest says while inflation is now close to the Fed's target, tariffs could potentially complicate their rate cut strategy next year. Joining me now is Mark Zandi, chief economist at Moody's Analytics. CNBC senior economics reporter Steve Liesman is with us as well. Guys, happy Wednesday. Mark, how long is it going to take, you think, next year before the Trump policies start showing up in the data? I'm guessing tariffs, even the looming threat of tariffs, might start some action.
Yeah, I suspect they'll start showing up in the data in the spring, summer of next year. It takes a little bit of time, I think, for the tariffs to get into place and implemented. So I don't think it's going to be right away. It's having impacts on markets right away as markets try to digest, what the president has in mind and what he's going to do and when he's going to do it. But in terms of the economic data, the inflation statistics, economic statistics, probably not to the spring or summer of next year.
And you say that this data shows that the economy is in a pretty healthy place to handle that. Is that how you feel no matter what the level of those tariffs is?
No, a lot depends on what those tariffs, what they look like, how big they are, how broad based they are, when they're going to be implemented, the boatload of uncertainty around all of that. And it's not just the tariffs, it's, immigration policy, it's tax policy, it's spending policy. There's a whole bunch of stuff that's going to be going on next year that's going to complicate things. But, I do think the economy is in a really good spot. It's performing exceptionally well. President Trump is getting a very good economy handed to him, so it can weather a lot of whatever he plans to do here. But there's a lot of script to be written and a lot of different policies that will impact how this plays out next year and into 2026.
Steve Liesman, speaking of immigration, the personal income portion of this data up 0.6%. That's still pretty strong.
Yeah, consumers look like they're in good shape. The spending numbers were a little bit lower than that, which meant the savings rate went up, though there was a bit of a revision to the past. I think one of the great hopes of retailers seeing those numbers, assuming they were looking at them, is that people were holding their powder for the holiday season. Remember, these are October data. Well, we know that they go into the November and December holiday shopping season in pretty good shape relative to their wallets. Inflation is an issue to an extent, though I will say the goods numbers in the PCE report were minus 1%. And that's one of the dangers of the tariffs here, which is that the way we've been able to kind of have this, call it 2.5% to 3% inflation, is negative numbers on goods and positive and sometimes too positive numbers when it comes to services. The tariffs will get right at the part that's keeping down the inflation rate. And to your question about when we're going to know this, Mark is sort of hopeful about the spring. I don't know if it happens in the spring, and I don't know how long the Fed sort of holds its powder or begins to start to think about the idea of whether or not monetary policy needs to address the fiscal side. As you said, John, there's a lot of stuff in the works. When all this shakes out, maybe, I don't know, maybe till the second half of the year before it's evident in the data. And then if the Fed waits till it's evident in the data, not until that time that you get some response from the monetary policy side.